Hey guys, do a quick live stream. Been a few weeks since last one. See how everyone is. Been looking into a few different things. Potentially looking at a third broker. Interactive brokers seems quite interesting. Appreciate they are obviously the back end of trading 212, so it's not really diversifying as such. If I have these and then trading 212 as a front end, but yeah, it does seem to be a lot cheaper than IG, so while still offering pretty much everything you'd want. Keeping an eye on the crypto as well. Seems to be bumbling around in a little sort of $1,000–$2,000 range. Waiting to do something. Yeah, so even going back to 8th of August, 9th of August. Certainly waiting to do something. Sure what the volumes, yeah, the volume's still pretty low compared to sort of previous points. Just take that rogue one out. Yeah, so volume's down on sort of April, May time, March. Which is good, waiting for the big volume. How is everyone? Hello Josh, hello James, Croftzilla, I presume. Fire any questions in if you got any. Quick look at the everyone's favourite chart. Getting behind now, pretty much at the date of where the line crosses to flat. That is today. Today is the day of the stock to flow model where it goes flat. So I think back in 2017 it did sort of lag it slightly. A little bit up and down, a little bit up and down, and sort of didn't necessarily get to all-time highs right away. I guess maybe we're a little bit behind. Or, as everyone says, this chart is a load of rubbish. I'm still a reasonable believer of this. Over the long term, it certainly seems to track it. Obviously, it wasn't made right at the beginning here. It's a sort of back-tested line, but yeah, it seems to be sort of work reasonably well. Only works for crypto, though, supposedly. It doesn't work if you try it on sort of other commodities like gold and silver. It doesn't sort of track over time like this. But yeah, we'll see. Josh, Any buys? Not on sort of gold and silver at the moment. Did my sort of IG, ISA transfer stuff. Got rid of polymetal and bought all of my sort of gold stocks. Today or yesterday, I've sold out of BT. Sort of reading a lot on the Briscord and sort of been having a few doubts myself anyway. Yeah, so sort of really only bought them for, obviously it looked reasonable value, but they had a lot of debt. Have a look at them. So yeah, 17 billion market cap. Yeah, and you're looking at sort of a lot of current debt really, but long-term debt, £15 billion. Seems an awful lot. But yeah, I sort of thought they're a good value stock, and I kind of like them for the sort of monopoly on the British sort of telecoms industry. But even a few months ago, sort of round near me, we had City Fibre, I think, laying their own cable. Virgin Media wanting to sort of lay theirs all around the country, and sort of other companies getting in. I found out the business lines round near our area, I think, are actually Vodafone. So yeah, if BT are sort of losing their monopoly over the long term, then I'm not really looking for a value stock with risk of debt and pensions and sort of declining revenue if they're not going to be in a monopoly. So sold out of BT. And I just topped up Prosus, Nintendo and Baidu. All seem to be sort of taking a bit of a whack recently. All seem to be good value, I would think. Yeah, so that's so far this week. Mr. Croft. Lithium, not really. I've got Rio Tinto sort of looking to get into lithium, but that's, presume, a little way off. But yeah, just sort of, I think with the buzz on sort of EVs and that sort of thing, I think people have already looked at lithium as sort of an alternative to get into, and just seems to be sort of a lot of it priced in, to be honest. So got things like Albemarle. I'm sure there's probably smaller ones obviously to get into, but then you're taking on more risk. But the big player, I guess, is Albemarle, and sort of forward PE of 41.5. Sort of enterprise value, EBITDA 34. Just seems like sort of a lot of people have bought into this and as an alternative to the EV manufacturers themselves. Maybe a sort of they call it a picks and shovels type sort of stock. Whoever wins out of the manufacturers, they'll all need lithium. So yeah, I guess a lot of people have bought into this and similar companies. So you either buy this and sort of accept that it's a high valuation, or you try and find the smaller ones. Yeah, which is obviously risk. So I'd rather sort of leave that alone, really. I do have sort of a few of the miners I'm in, people like Glencore, Vale, sort of in nickel and that sort of thing. A little bit of cobalt, with Rio Tinto as well. So yeah, I think sort of maybe the other metals that are going to get used in the EV market, aside from lithium, maybe it's sort of a little bit of a better way to go, because those companies are sort of still reasonably good value. Josh, on eBay at the Silver Britannias. Anything pre-2011 selling for a stupid amount. Yeah, it's people like the old coins. I think mine are sort of mostly 2019-ish, 2018, some of them. Yeah, I didn't really sort of go for the old stuff. I think, kind of sort of think when shit hits the fan, if you like, silver is silver. If you're trying to sell it, people just want silver. They're not going to care quite as much about sort of numismatic value, as they call it, and sort of how old a coin is and that sort of thing. I think we could be back to just weight, and that's it. Spot price for the weight. Oh, Craig, just bought Nintendo and Rio dips over the last week. Very nice, very nice. Me too, or on Nintendo at least. Anything particular on the short list that I'm close to buying? As I say, I have bought Baidu and Prosus, sort of mainly for the 10-cent exposure, but also a little bit of sort of emerging markets in general in there. They're in a lot of sort of Indian stuff and yeah, sort of emerging market e-commerce, a bit of online education and that sort of thing. So I thought that was interesting. Do like Prosus. It's whether they can sort of find a way to sort of get the value basically out of it. Obviously, being on the European Dutch Stock Exchange and the sort of NASPA's side on the South African Stock Exchange, it just sort of doesn't lend itself to a growing market cap, but I'm sort of fairly confident they'll be able to find a way out of it in the longer term. But yeah, if I do get this sort of question a lot, if I were to sort of suddenly, if the crypto suddenly goes to 100k tomorrow instead of end of the year, then what would I buy? I'd certainly be looking at probably FedEx, just sort of looking on the watch list, seem a reasonable value. Probably Alibaba and more of the Chinese tech. What else are we looking at? Taiwan Semiconductor sort of come down a little bit. Again, still a little bit of a premium valuation, but I think they look good. Possibly Lennar. Tyson Foods has run up a little bit now. Probably would buy a bit more into Rio Tinto. Micron, I think looks pretty good at the moment. What else have we got? Possibly Archer Daniels Midland. It's a little bit higher than what I'd like. Probably would buy more Nintendo. International Paper. Intel, quite bullish on Intel. Don't think a lot of people are factoring in their upcoming sort of graphics card launches. I think people are focusing a little bit too much on consumer CPUs. Sort of think that's the whole market really, when obviously a hell of a lot of the revenue and profit comes from sort of server side CPUs, which people don't really focus on, and then sort of other things that don't make the public news that much, like the Mobileye and graphics cards. So yeah, I'll be looking to buy them. Can't really put much into REITs because I only want those in the ISA, but some of the REITs don't look too bad. Possibly a bit more into Vici. Yeah, that'd be a good start. Josh, you buy the modern ones as you can get them cheaper. Oh, from the pawn shops and that sort of thing. You have some older ones you can make a decent amount on. Getting them for a steal. Yeah, I appreciate that. I haven't really got any sort of pawn shops local or ways to get those sort of cheap coins. It would be just eBay, really, which obviously then you're paying the sort of premium that you're looking to sell them for. But yeah, I've kind of had to just suck it up and buy them new, pay the VAT and everything, or pay, getting them from places like Goldcore. You're not paying VAT, but you're still paying 19-20% premium, just because they know they can, I expect. You can't get them anywhere else cheaper, so they bump the premium up. Craig, what are your thoughts on Barbar? Seems too cheap to be true at the moment. Well, if the government are going to sort of keep finding little ways to crack down on them, I think Barbar today is cracking down on fake reviews and sort of fake, potentially counterfeit products and that sort of thing, which obviously they've always had a fair reputation for. So talking about this on the Discord today. I still think Amazon have sort of got a lot to answer for on that as well. Certainly sort of seen Amazon change a lot over the last few years. Hell of a lot of sort of cheap Chinese stuff on there. But yeah, so that could hit Alibaba for sort of revenue on the main commerce side. So you could keep getting government sort of clamping down on these things. Haven't seen, it sort of meant, I did read an article today, sort of Baidu seems to have come out of this largely unscathed, but he's still getting the drop in sort of market cap. So I think they're under $50 billion now. Seems a hell of a cheap valuation really for them. I do like Baidu, Tencent and Barber sort of fairly equally at the moment, although I didn't buy Barber. A few analysts on CNBC saying don't touch Chinese. Yeah, I've sort of seen that. What's his name, Jim Cramer, sort of flip-flopping a little bit. I'm not sure I trust the analysts all that much, to be honest. I do look at them for sort of forward PE and that sort of thing, but that's not the same analysts really. It's not the sort of the TV guys on things like CNBC. That's more sort of investment bank people. So yeah, you take them with a pinch of salt, but don't put too much sort of stock into it. But yeah, I think have the same with crypto really. When it's down, there's sort of negative news after negative news, and you sort of buy into the negative news, and if you think long term it's going to work out, then you hold on. Josh complaining about the VAT on silver, and someone at work said it's a Tory problem. Yeah, that's quite good. Complaining about tax. Yeah, I do wonder why. I suppose it's more of an industrial metal, but tax on silver and no tax on gold still seems a little bit strange. I wonder why, if that's why less people sort of want to buy the physical. Obviously, if you've got to gain sort of 25+% with the premium just to break even, then it doesn't make people want to buy. But there you go. Keep an eye on some of the crypto news as well. See, there seems to be a big push for futures ETFs now, which could be potentially bad news. It's sort of taking a lot of possibly institutional volume off exchange, not buying real coins. It's sort of not particularly good. We prefer physical ETFs. Obviously, that would take up supply off the market and drive up the price. Not really sure what sort of huge involvement in cash settled futures is going to do to the market, really. I can't imagine all these big institutions are going to sort of want to invest in futures, and then sort of a couple of sort of teenage whales or sort of 25-year-old whales can move the market and sort of either rocket up people's institutions' investments or potentially drop it if they sell. I would think the institutions will still want a hand in the real thing. So interesting to see how this is all going to play out, really. If all the physical ETFs get rejected and we just have futures ETFs, or maybe for the next 6 months, then yeah, could get an interesting time. You bought cold bullion a few times and then bought some silver, yeah. Silver to gold ratio is still out. It's been out for a long, long while though. I know the gold bugs on a lot of the YouTube channels will sort of say, extra long-term average is sort of 15 silver to gold. I do think it's going to take sort of probably a major event for it to go to that again. I'm a sort of believer in that the inflation is longer term than people are thinking, which could push up gold, and if gold goes up you'd expect silver to sort of do double maybe whatever gold does, but it certainly isn't going to bring the ratio down to sort of 15. I think you'd need a major sort of crash in stock markets or sort of fairly heavy inflation for quite a while. Yeah, you got that sort of this 5% plus sort of carrying on for a year maybe, people would start to say it isn't transitory, and I think you'd start to see a real move in gold, and silver would probably outperform that quite heavily. You might get down to, I guess, 40 to 1 on silver to gold. But yeah, maybe not the 15s that everyone's talking about. I think the people that say 15 have generally got a reason that they want you to buy. I don't follow a lot of the sort of Mike Maloney's and people like that. I just think they probably do put out some good information, but they've got kind of an agenda. Some of the others are, sort of Peter Schiff and people like that. I know everyone laughs about him, but he is really just a salesman. Anyone who makes money directly out of gold going up, obviously you maybe don't want to be hanging on their every word. Yeah, just saying some good news at least. A lot of people saying we're still going to crash. The price action mimics previous cycles, indicating Bitcoin will crash to $15,000. Lovely. Sure, it's a load of old rubbish. Fidelity making a long-term bet. Hear a lot of this sort of big investment banks and sort of institutions just sort of, you'll see a news article every now and then just saying our institutional clients are asking for Bitcoin exposure, and then sort of not really a lot necessarily comes out of it. Don't think they've got the ability to sort of put large amounts in at the moment. Some are obviously taking bets. Haven't really seen the sort of articles about institutions we were getting sort of earlier in the year. The sort of rougher investments invests $700 million. That seems to have sort of dried up for the minute. Could be coming towards the end of the year, I guess, again. But that was obviously big pushes. You get sort of $2,000 or $3,000 move just on that news, and then obviously you had the Tesla news. Maybe if someone else sort of comes out as buying big, a lot of people were saying Apple had bought, Google had bought. Never turned out to be true. I think you've got to sort of wait until these things happen and don't be sort of buying in based on those sort of rumours. People, you get people coming out saying it's confirmed, it's 100% certain, and then it doesn't happen and they just go quiet again. So, yeah, I think have it as a sort of under-promise and over-deliver when it happens. Don't expect too much of it, and if it happens, then you should get a nice pump. America had a drop in spending in July. I think the price of goods, especially used vehicles, has topped out. Do believe in inflation, but looks like people have just stopped buying at current prices. Yeah, I think the sort of consumer spending obviously is how much they actually want to buy, but then you do have sort of the major commodities, a lot of which are sort of heavily up on sort of pre-COVID levels. I'm just looking today, sort of corn and wheat and that sort of thing are all quite a bit up. Copper's quite a bit up. Coffee's up. Just sort of unrelated to each other things. The idea is being put forward that these are sort of all in a supply squeeze, so that's what's pushing the prices up. But sort of all at once, lots and lots of different commodities all at once, seems a little bit hard to believe. I just personally think it's a devaluation of the money. I'm a believer in that train of thought, really. You don't see it in the FX sort of rates. The dollar and pound isn't going to sort of drastically change if they're all devaluing at the same time. Certainly us and America are both doing quantitative easing. So, yeah, you go down at the same time, the rate barely moves, and everything else goes up sort of correspondingly. Gold up, crypto up, stocks up, everything up except bonds. You think some stagflation could be here? Well, see what happens in October, maybe. I'm not a believer in these sort of, on average, October is a bad month. I kind of think, on the years that it does happen, there probably is sort of some negative stories that come out. Then the years that it doesn't happen, people just keep quiet about it. Obviously, some months have to be worse than others, so there's always going to be a chart that will show some months are worse than others, but yeah, I'm not sure I'd sort of forecast, whether a month is going to be bad because of averages in the past. I know you get the whole sell in May and go away type things. But you can't go too heavy on this stuff. So, interactive brokers. In case anyone's sort of wondering why I'd be looking at this, the sort of plan going forward was, if I'm selling out of crypto, to be sort of having two brokers at sort of 50-50, maybe sort of 60-40 price amount, sort of portfolio amounts between trading 212 and sort of what I was thinking IG. So a lot of the crypto that I'd be looking to sell sort of towards the end of the year would be going into stocks on IG, and obviously with their foreign exchange fee of sort of 0.5%, and not being in an ISA, gets sort of quite expensive. Sort of buying 0.5% FX fee and then selling again, you're totaling 1%, and obviously then buying something else if you're selling something that you think has got a bit highly valued, sell that, buy something else. You've spent 1% in fees. Yeah, so that could get kind of expensive. I kind of wanted two ISA providers, so quite happy with IG and trading 212. But yeah, sort of looking at sort of maybe not putting all of the rest of the money in the IG general investment account. So could maybe have interactive brokers for that. They don't do an ISA at the moment. I think with some of these fees, if they do open an ISA at some point, I know it's flip-flopping. I've only just joined IG, but I'd probably consider transferring, if I could, the IG over to here and maybe just accept that the whole lot is with interactive brokers. It certainly is cheap. And they're sort of, as I understand, the biggest broker in the world, so who better to have your money with? And I'll be slightly diversified, I guess, if something happens to sort of trading 212, then obviously I've got these as a backup. Even just if part of my reasoning was like if the app's down, trading 212 app's down, you want to make a trade, you've got sort of someone else, so obviously I would then have interactive brokers to make a trade on. So it's not ideal, but yeah, I don't think you can ignore these fees. So you sort of transfer money into them. Once you pay like $2 FX fee to transfer it in there, and then you sort of pay a very, very small commission per trade with no FX fee. So it works out sort of pence really with a minimum order. I think the European are a little bit more. But then when you're sort of selling and buying something else, you don't pay the FX fee because it stays in the currency that you're trading in. So if you sell a US stock and buy another US stock, you only pay the very small sort of pence commission. You're not paying, like with sort of IG, you're not paying 0.5% FX fee and then 0.5% again to rebuy. So yeah, that's sort of the thinking behind looking at these. I might get a trial account and sort of just give them a go. See what, because they do a hell of a lot of markets, sort of stocks that I've not been able to buy on either IG or Trading 212. I think may be available here, so that'd be nice. James. August is meant to be slow, and then you get the pickup for Santa Claus. Yeah, exactly. Freight movements go crazy from September. I suppose that's a real sort of real world indicator, something physical that happens at least, not just off averages of the past. Bitcoin sell price at the moment, I'm sort of still thinking average out. So I'm looking at sort of probably $70,000 as sort of the next sell amount. Probably sort of around that price, 70s, 75s. I'll be sort of selling quarter of a Bitcoin sort of here and there, and then sort of closer to 85,000, and then sort of 100,000. Hopefully, if we get to 100,000, I'll be selling the majority of everything, really. So yeah, altcoins as well would be generally going at those price levels. Sort of sell the altcoins when Bitcoin's at around sort of 70,000, 80,000, depending on price. Which one I think has gone up more than it should have done, let's say. And yeah, sort of hopefully ending up at about 100,000, and I'd sort of keep some back of the majors, maybe Bitcoin, Ethereum, and Cardano, sort of for the slightly longer term, just in case it goes mad. Craig, do I get influenced by the exchange rates? A few dips in the US today with Delta. You looked and the pound dropped. Yeah, maybe sort of longer term I would. You know, if you get sort of 0.5% move in pound dollar, it doesn't really make a lot of difference. You know, obviously some of that is baked into the price a little bit. But yeah, when you're sort of getting like, you know, the dollar going from like it's 137 now, you know, at one point it was 142.5, I think. Then you're sort of thinking, yeah, maybe buy a little bit more in US stocks. But yeah, not sort of day-to-day moves as such. Once you get a massive move. Remember the Brexit day? We had like 6-7 cents or something. I can't remember what it was because it partly ran up so far, thinking we were getting a Remain vote, and sort of everyone was happy about that. And then we got the Leave vote, and it went down. Might have been over 10 cents. So yeah, you might make decisions around those sort of moves, but yeah, sort of 0.5% wouldn't really take too much notice of. Do you remember Clippy from Microsoft Word? Yes. Irritating. Whatever happened to him back in the 2000s? He had the world at his feet and then disappeared. I guess they realised it was quite annoying, and people just used to click off it and watch the silly little animation. Now it's more a sort of business-like, can we help, with a little bit of playful font to try and make it less business. Yeah, I think Clippy was there sort of trying to humanise it and make it a bit more fun, but people didn't take it that way. James, after the Bitcoin is sold, then it's wealth preservation. Pretty much, yeah. Dividend stocks, ETFs. I'm still sort of thinking maybe 60% of the sort of stock portion, 60% maybe individual stocks, and sort of 40% ETFs. Not dividend ETFs, just my sort of regional ETFs and sort of thematic ETFs, like the clean energy and the global water and that sort of thing. And then sort of regional emerging markets, Europe, America, and that sort of thing. Maybe sort of 50-50. I haven't quite decided yet. Depends on whether I sort of trim back some of my individual stocks. But yeah, I'd sort of keep back maybe, I don't know, 50,000 in crypto, and sort of pretty much all of the rest in relatively defensive sort of stocks that are going to provide sort of some dividends, but I'm not really all that bothered about the dividend. Quite happy to sort of keep companies like FedEx. So I think they're paying 1% or something. Yeah, 1% dividend, but doesn't really bother me. If I want the income, then you can just sell a little bit of it. Obviously, they're reinvesting more of their profits, only paying a 1% dividend. So if they reinvest profits and the price goes up, then you just sell a little bit of the stock instead of sort of getting the dividend, which the dividend would have caused the price to go down anyway. So it doesn't really matter whether you get paid the dividend or just sell a little bit of stock. You're still sort of taking the same amount out of the market cap. So yeah, I'm not really sort of hugely bothered about whether they're particularly high paying dividends, more just a sort of on a value basis. But yeah, not really a fan of the dividend ETFs. I sort of mentioned a few times. Doesn't seem to be very good long-term performance, and they've sort of got a lot of dividend stocks that I'm not really that keen on. So yeah, rather sort of pick my own. And yeah, that is sort of wealth preservation mode. Hopefully I'll be going sort of semi part-time, maybe 3 days a week, and yeah, partly living off the portfolio. See how it goes for a year or two. Go from there. So let's check on the crypto, see what's going on. Going to be a little while before there's any sort of major sells, I would think, or any sells at all, really. Like I say, sort of probably round about 70,000 Bitcoin is what I'm planning to be the next sell. Maybe if Cardano sort of carries on at this rate. Last sell of Cardano was sort of 80 pence, I think. Yeah, maybe if we get to sort of £2.50, I've been sort of thinking might make a sale. Expect it could get to £2.50 before what would it be, sort of 50,000, maybe 52,000 Bitcoin. That'd be about $70,000. Yeah, I could see Cardano potentially getting to £2.50 sort of before then. Might take some off the table then. Yeah, and the sort of smaller altcoins in my portfolio, potentially XRP. I've never been 100% convinced by XRP, but looks like they may be getting a resolution at some point to their lawsuit. I think if that comes out positive, then probably see a fair pump in XRP. May take some off the table then. Litecoin still not really 100% sure about. Don't see a lot of development on it. I'd sort of set my price targets at sort of 200, 300 and 400 pound, but starting to wonder whether it is sort of worth holding on to it quite that long. So what's doing particularly well today? I nearly invested in Audius. That's quite annoying. I think I looked it up and it was quite difficult to buy on. I was looking on Binance, but yeah, was quite close to investing and didn't in the end. It's up 100% in the last 7 days, so it's quite annoying. But yeah, it seemed an interesting sort of platform, sort of a crypto Spotify. Not in a lot of these newer coins though. Still got the old guard from 2017. Internet computers actually down the most over the last 7 days. Interesting. Has done quite well so far, pretty much. Well, now it's dropped down a little bit more, but I was kind of just above double my money on that, I think, in a month or two. Can't complain at that. James. No, not a small Tesla position. I know you want it to happen. If it drops to $200, then I will start looking. Let's have a look at Tesla then. So, 655 billion. I know you guys sort of on the Discord. I just feel like you guys talk about it as if they're sort of a little fledgling, startup. I know Dick sort of constantly comes out with his they're taking market share off the competition. You sort of think if you're over 3 times as big as any other manufacturer. Obviously, they've got other sides of the business, but, you know, what's the car portion of the business worth today? 300 billion? That's 50% more than Toyota, the biggest manufacturer. So if you're the biggest in the whole market, I can't see how you're taking market share off the competition. It's you're the sort of big player at the top that everyone's looking to take share off. Obviously, they have the lion's share of the EV market, and other players sort of coming into it are potentially taking market share off them. Yeah, I think the whole taking market share off the competition argument works if you're a, you know, £10 billion startup, you know, like a rival. If they're taking market share off, you know, the competition, then yeah, fair enough. They're a growing sort of small company. I don't believe in them, but yeah, I think that argument would sort of hold for them, but not at 600 billion. So analysts say $5.27 for this year's earnings. Obviously, it includes, this is after they're doing a lot of their R&D. So, yeah, what do you look at? Operating cash flow is sort of before R&D, isn't it? So, 9 billion in operating cash flow, trailing 12 months. So, it's a price to operating cash flow of 70. Still seems very high. Yeah, I can't get on board with it. Balance sheet still looks relatively fine. Yeah, reasonable amount of equity. Current assets pretty much cover total liabilities. That's fine, but they're diluting shares, so you've got that to consider as well. Yeah, I just obviously don't believe the story, to be honest. I think as I say, most people would say it's not sort of worth today's numbers. So the only way you can really be happy with today's price is sort of building a model for where you think they're going to be in the future. Which all the ones I've seen, the sort of Ark Invest one, Meet Kevin's one, there's been sort of a few published, just seem to have what I would consider to be sort of fairly gaping holes in the figures. Sort of seen people putting, you know, hundreds and hundreds of billion in insurance revenue. I don't really see that as particularly likely. Maybe not for, you know, maybe in a decade, but nothing anytime soon. So, yeah, if you can't believe those models, and they're not worth today's numbers, because the sort of solar side and, you know, their other ventures, battery storage and that sort of thing, they're not producing today, so you're basing today's buy that sort of those sectors of the business are going to come good and they're going to dominate in those sectors, then it's a future model projection. So yeah, difficult to sort of word my my thoughts on them, but that would be the only sort of bull case that I would really want to buy them. You reckon Clippy got involved in some dodgy situations? Yes. I just don't think it was the sort of professional stance that they want to go with. I mean, you had... did it sort of go around the Steve Ballmer time? He was a bit strange. I think he wanted to try and sort of business them up a little bit more and sort of less of the playful stuff, even if he was a bit eccentric. Craig, the dream to live financially free from dividends. Exactly. How much of a portfolio do you think you'll need to retire on? Do you watch and follow the dividends and income channel? I haven't seen the dividends and income. Like I say, I wouldn't rely entirely off dividends. It might be partly off selling a portion of the stock. So the combined amount being about 4% of the portfolio. So partly from dividends and partly from selling stock. 4% sort of being a reasonable amount to take out, should be sustainable. If I can get to sort of withdrawing 3% instead, that would make it a bit more sustainable. So that's part of the reason for keeping the part-time job. So then I think probably about 600,000, maybe a little bit more. I've sort of been thinking with inflation, maybe even want sort of 750,000. So I might let crypto run a little bit longer than I was originally hoping. To get a little bit more. So sort of 4%, 3% of that would give me 25,000 a year, rising sort of with inflation, hopefully as the stocks rise and the dividends rise. So 25,000 rising with inflation, with sort of a side hustle potentially, if not sort of part-time work for as long as I want to sort of carry that on. I think that would be relatively sustainable. So I guess with the two portfolios, sort of stocks and crypto at the moment, I'm at 520-ish. Plus a few sort of small things on the side, a bit gold and silver and that sort of thing. So not too far off potentially. Kind of hoping for a Christmas crypto pump to push me to the 750 really. Or I'd need more than 750 because there's a lot of tax to pay. I was kind of thinking originally thinking get to about 700 odd, pay 100 in tax, and I would have 600 net of everything. But I just think with costs going up, potentially if the longer term inflation is going to come, then might need a bit more. So I might need the portfolio to sort of go to maybe even 800,000 to sort of pay 120, say, in tax, and be left with sort of closer to 700,000. And working, if I were to work 3 days a week, then that sort of near enough covers most of my expenses anyway, so I wouldn't be drawing all that much of the portfolio. Everything Money. I do quite like Everything Money. Not sure about their views on the sort of growth stocks. I don't think they take too much of a view as to sort of growth. He does his little stock analyzer tool, but that's sort of almost entirely based on past growth. I know he says he doesn't look into specifics on the company, but there might be sort of a huge new revenue stream, for example, coming on a company very shortly, and it wouldn't be reflected in the past numbers, and so then he's going to sort of write that company off when it could be a good investment. So it's a few sort of pitfalls to looking purely on that basis and then writing off companies. I think it would help maybe to do a little bit of research into the companies first. I did watch a video on Micron, and sort of saying like you can't see how Micron can do well if AMD are doing well as well, which sort of seemed a little bit misguided. They're not really even in the same industry. Obviously, Micron do sort of memory and NAND flash and that sort of thing. AMD doing CPUs and a little bit of GPUs. So, yeah, they'll both go in a PC, if you like. You'll have your AMD CPU and Micron RAM. So, yeah, I think probably a little bit more research from them before wouldn't go amiss. Yeah, but I do enjoy the videos. They're quite funny, and I quite like the guys, even though they are a little bit cocky. Kind of think the sort of trading analysis from Mo seems a little bit simplistic. I don't know if he goes into more detail sort of on their in-depth stuff in the Patreon, but yeah, it does seem to be sort of, one line is moving above the other. That means it's a buy regardless of anything else. Not sure how that works out in real life, but yeah, it seems a little bit simplistic. Yeah. See, Tesla is taking a bit of a whack today. 666. Had a bit of a rough couple of days. Accidents. Solar City nears conclusion with $2 billion at stake. This is what I mean. It's, I kind of think there's going to be other players in sort of batteries and solar power and that sort of thing. I think the bulls are sort of pricing in that Tesla are going to dominate this when it sort of barely even exists yet. It just seems a little bit presumptuous. I'm sure they'll do well, but you can't sort of predict that you're going to be dominating something that sort of barely exists. But yeah, I'm sure I would like to buy them at some point. But yeah, a few people have, Croft did sort of ask me, have the crypto, sort of whether it makes me want to hold growth stocks less, which I think it does. If I'm sort of looking for something more speculative than my value stocks, I think at the moment I would rather hold crypto than sort of, the high growth stocks, things like Palantir and Shopify and that sort of thing. I think even though there's very little sort of fundamentals to go on, I think from a sort of risk return basis, crypto has just got more to it than some of the growth stocks. Compared to the value stocks, it's obviously got more upside potential than those, but I don't think the value stocks have got the same downside risk that growth stocks have. So I kind of think it's a nice combination, sort of defensive stocks, REITs, value stocks and that sort of thing, gold and silver stocks, and then crypto as my sort of growth part of it, basically. So yeah, for anyone sort of wondering why I don't hold all that much growth stocks, that is kind of the reason. Maybe I will change when the crypto goes and it's basically just one big stock portfolio, but yeah, maybe not. I've got some stuff in there like TSMC as a sort of growth stock, and then the ArcPi, sort of bit speculative, but I kind of like the gene editing space. Quite interested in it, so it's only less than 1% of the portfolio, including the crypto. So I don't count that as a huge risk. All the sort of About 30 stocks all put together is 1%. So yeah, that's kind of a little bit of speculation. Hello, seller. So we're about an hour. I guess I'll hang around for a little while, see if there's any more questions. I always wonder where these 1 year sort of target estimates come from. Always seems to be quite a bit above the current price. Very rarely any sort of negative news on these. If you look at someone like Intel, which the market is fairly sort of bearish on, it seems. Even them, it's 20%, nearly 20% above the current price. Not sure I'd be all that happy with these. They do say there's the sort of vast majority of analysts are sort of bullish on stocks pretty much at all times. You have the sort of companies that come out and do the research on short selling and that sort of thing. They do their research on a company and then short it, but generally there isn't all that many analysts sort of bearish on stocks. You get sort of things like this, your sort of buys, strong buys and holds and that sort of thing. Obviously Intel have had quite a downturn in the last sort of few months, and I don't think at any point this sort of really went much below sort of holds and buys. So yeah, not really sure of the analyst's performance. And they give you this price target sort of, obviously a massive range there, $40 to $85, over 100%, 62 in the middle, and that's from 25 analysts, 43 analysts on Intel. So to be from 40 to 85, kind of got to take it as nonsense, really. Hello, the nurse. Craig, trying to max out your ISA this year. Couldn't bring myself to be paying tax on it. Not think about spreading your money between brokers. It's the brokers that hold your money. Yeah, pretty much. So, yeah, I do want, like I say, I didn't want to sort of put the whole lot in trading 212. Sort of see that as a little bit risky, even though, you've got some protection and it would all go to interactive brokers. But yeah, I would just prefer to have sort of 2 ISAs at least, and then as I say, maybe it wouldn't hurt to have sort of a third interactive brokers direct as a general investment account. I'm not going to try and sort of split it between lots and lots of different ones, trying to get the FSCS protection and that sort of thing. It doesn't really seem worth it. Seems a little bit too much. Speculation that there'd be a hack on the national grid. I guess that would be that would cause a great deal more problems than just sort of crypto and stocks and that sort of thing. Potentially could happen, but yeah, I don't think crypto would be all that affected by a hack on the national grid, because it's only sort of UK. I don't think we have a great deal of influence on crypto, to be honest. I don't think we've got a lot of miners here, really. And sort of institutions, obviously they buy, but yeah, don't think they would have all that much sort of effect on the market, really. I don't really know what else I would do with the money otherwise. Not having it in cash or anything like that. I'm not really that keen on buy-to-lets. Yeah, and I don't want a huge pile of gold and silver. Right, in case they go under, take a while to get your money back. Got all of it in trading 212. Yeah, I mean, as I say, it's sort of if I get to the sort of retirement level portfolio, it'd be a lot to sort of spread around. I think probably 2 or 3 is the limit of what I would really be wanting to manage. Obviously, if these are quite a bit in general investment accounts, having to pay tax on all of these until I can get a lot of it into ISAs, it's probably going to take at least 10 years to sort of get the whole lot into ISAs. So yeah, I think 3 brokers would probably be enough. If they go bust, then yeah, you're going to have a bit of hassle for probably a year. I would kind of think keep some cash back, so you're not spending all of that. I'm not going to be, if I'm once retired, I'm not going to be 100% invested in the market. Probably have quite a large sort of, not emergency fund, but just cash pile. Been sort of back and forth on whether to hold like a year's cash. So if anything happens, you just live off that year's cash and wait for the market to sort of come back. It's a bit different when you're investing, because you're just piling money into the market all the time. But if you're withdrawing, then yeah, you maybe want a bit more cash. I did look at free trade, but yeah, I think you'd really have to have free trade plus to make it worthwhile, and it didn't really look all that appealing, to be honest. James, have you considered getting into property? Yeah, it just seems like a huge sort of tax headache. Even if you hand them over to a sort of management company, then you're paying them their fees, and sort of I would end up paying more to accountant to sort of sort out all the tax, a lot of reporting, and then you've got all the problems of if something goes wrong. Even if the management company are dealing with it, you'll be getting bills, you know, for sort of boiler explodes or something. They'll deal with it. They probably use an expensive plumber or builder. You get an expensive bill. Yeah, so just doesn't really seem worth it, sort of compared to. That's part of the reason I have quite a lot in REITs. Sort of my real estate side. Sort of compared REITs versus buy-to-let before, and the buy-to-let didn't really come out all that favourably over sort of the lifetime of buying one, taking into account all the costs and everything. I appreciate, yes, it's physical bricks and mortar as opposed to stocks in a brokerage that could go wrong. But yeah, it just seems like it would sort of take up an awful lot of your time potentially. You get lost tenants and downtime and that sort of thing. Someone moves out and you want to, have to go to, refurb it and redecorate if they've done something bad to the place. Just not really something I was that keen on. DeGiro, thinking of switching at some point, mainly because I have the exchange of your home country. Yeah, the fees, I sort of looked at them before. It seems quite high fees, really. They don't have all that many exchanges. I think sort of compared to some of the others, there's probably others that I would go to first before them. I guess I'm sort of widening the net a little bit more if I'm not looking at ISAs, because I can't really do anything with the ISAs maxed out until April, and then even in April I'm only putting another 20k in. So yeah, if I'm just looking at general investment accounts, I guess I can look at all of them. But yeah, I don't think DeGiro would be that high up the list. I think in the UK we've probably got a little bit better options than the Europeans. But yeah, I'll look into interactive brokers more, and certainly some of the competition. I'm not really keen on people like AJ Bell and Interactive Investor and Hargreaves Lansdowne. They just all seem to have horrendous fees. So yeah, I'm kind of looking at the cheaper ones, and then IG and sort of one or two others. The list isn't huge, unless some of the others start coming down on their fees. I guess this was part of what interactive brokers have done. They sort of seem to be quite quickly lowering their fees on sort of the consumer side, so maybe it's the start. Property's great if you're moving up the ladder because you don't pay tax on your main residence. Yeah, that's that's fair enough. I'm not really looking to live in a particularly big place. I'd be looking to sort of buy a 2-bed flat probably. So yeah, I wouldn't really be scaling up on the property ladder. Sally, you tried the demo account? Yeah, I'm probably going to try the demo account myself. I've sort of read that it is quite complicated. I'll see what it's like. The IG account does really look quite a bit complicated, so I'm getting used to that. But yeah, I keep seeing sort of IBKR Lite. Not sure whether they're trying to sort of make a more consumer-friendly platform. I see they've got an app. So I'll give them a try. If I like it, then it could be the main general investment account, sort of, hopefully for the big money coming towards Christmas. I think hopefully I'm probably looking to put a couple of 100,000 somewhere. So need to make a decision. Alright guys, I'll probably leave it there. 9:15. Use trading 212 for the fancy interface and IB for the main stuff. Yeah, that sort of slightly concerned me that obviously you are pretty much 100% with the same broker if you go down that road. I think I'd probably stick with IG at least, sort of have my ISA with them just as a bit of platform diversity. Yeah, it wouldn't hurt to maybe have a third. Right, I shall head off. I'll see you guys soon. Thank you for tuning in and all the questions. Always appreciated, and hope have helped in some way. So yeah, see you guys soon.